Welcome back. You're tuned in to Chartbusters. You're on CNBC-TV18. Well, there have been quite a few listings today. Another one is Seshaasai Technology. It saw more or less flattish debut with a bit of a negative bias. But to help us out with how they see the company pan out, I love these visuals that come in, right? Of ringing the bell, celebrating all the hard work that's been put in. And now, being a company that's publicly listed, good amount of responsibility comes with it as well. Mr. Lalwani, the chairman and managing director of the company, joins us on the show. Hi, Mr. Lalwani. First of all, congratulations. I'm sure there's a lot of hard work that goes into the process, into building a company. And now you have various owners as well via your shareholders. That said, what's the trajectory for the business? In the next 3 years, what is the goal for the business in terms of revenue growth, in terms of margins, margin outlook? And revenue as well, you've got various verticals. Tell us, split it up bucket-wise. What would the contribution of each vertical look like?
Yeah. Hi, Nigel. Thanks for having me on the show. As you know, we said earlier that our business is divided into 3 verticals: the payment solutions vertical, the communication and fulfillment vertical, and the IoT vertical. And in the payment solutions vertical, we predominantly are catering to to various spectrum of customers. And with the growth in the payment card industry that we expect from now to 2030, we're supposed to have a 12% CAGR on the growth. The kind of product mix that we have and the constant innovation that we're doing to get to new products which are relevant for the customers, we are sure that we'll be able to retain our market share and grow as the market expands. The IoT vertical for us is a vertical wherein we have accelerated growth. This is a sector for us where we are getting into non-BFSI sector, where along with the consumer and the discretionary spend growth of India, we should be able to grow our businesses in retail, in renewables, as well as in manufacturing. So IoT definitely for us will be a vertical which will grow much more than the payment solution vertical. But communication and fulfillment also has some promise in it. So net, we feel that all the 3 verticals for us are going to be growing. Definitely the IoT vertical for us will grow much faster.
All right. If you could give us a sense, Mr. Lalwani, congratulations on the listing. Over the last 3 years, if we look at it, all the ups and downs, etc., the revenues have compounded at around 25%. Over the next 3 years or so, do you believe this 25% growth rate continues? And since IoT is likely to grow the fastest, what compounded growth rate is that segment to be at? And while you're talking about IoT, what we notice is that your margins have improved as well, from closer to 17% to over 25%. Is it because IoT has higher margins? If yes, by how much?
So essentially, the margin expansion that we saw over the last 2-3 years was due to multiple factors, right? One was obviously our revenue moved from 1,100 to around about 1,500 crores. So we obviously got operating leverage out of that. Also, whatever cash was generated in the business went in, and the resources were deployed for better sourcing and more competitive sourcing. We also had advantage because our ratings improved, so we had lower cost of funds. So with these multiple factors, we saw a margin improvement that has happened over the years. Now coming to a question about the growth aspect, if you see historically, we've been a company who's been steadily growing. And with the potential in the market and the target market that we have, we hope to maintain and grow our market share. So with that, we'll definitely have healthy growth in the times to come.
What is healthy, sir? 25% plus is healthy, and IoT in particular grows at what rate?
See, IoT, if you see in the last 2 years, we've been doubling our revenue. So definitely IoT will be at a much accelerated rate of growth compared to the other verticals. It will be our growth engine. But since the revenue contribution of IoT to the overall revenue is yet not very significant, right? We will still have the payment solutions and the communications vertical contributing significantly to the revenue, and we are confident of growth in both these verticals as well.
Margins, you want to give us a broad band?
Essentially, we are confident that the current margins that we have had, we should be able to sustain over the next year or two. That's the outlook that we have on the margin side.
Mid 20%.
Yeah, I mean, the EBITDA is around 24-25%, and our PAT levels are between 14 to 15% right now. Yes.
But I reckon your PAT level margins will increase as well, because a large part of your IPO funds will be used to repay some of the debt. So that will take away at least 25 to 30 crores of interest. So to that extent, should we see your PAT expanding immediately?
So I think now we'll probably get the advantage only for half of the year, for the debt repayment. So it will be to that extent. But definitely that is going to contribute to the PAT expansion, yes.
Right. Just a larger macro question. You said that a lot of the IoT business has been exposing you to the non-BFSI segment. What proportion of your revenue currently comes in from BFSI and how much is it non-BFSI? How much more is the addressable market there? What are you looking to target here?
So I think roughly we have about 87 to 88% of our revenue now coming from BFSI space, and the non-BFSI space is the remainder of that. The IoT business in India is slated to be about 10,000 crores. The RFID tags and the hardware business is slated to be about 10,000 crores by 2030. So a lot of our energies, a lot of our investments, a lot of our focus is on this vertical, which includes basically passive tags, active tags. We're also focusing on the SIM and the eSIM part of the business. eSIMs will probably grow in the next couple of years. So, with these three areas of expansion, we expect the IoT vertical contribution to go up, over the next 3 to 5 years significantly in our overall revenue construct.
Do you have a target for that? It's currently 7% of your revenue. Does it go to say 10%, 20%, 25%?
No, we are probably by FY27 we kind of are targeting that to be at least in the 18 to 20% range is the effort that we're trying to put in.
Okay, all right, Mr. Lalwani, appreciate you joining in. You've given us some numbers, some kind of an outlook. Wishing you, your team, all the very best. Enjoy the evening, enjoy the day. It's a big day for you all. But post your results, request you to come back on the show. And in fact, we'll quiz you a little bit more with regard to numbers and the way ahead.